If you think that Tesla will change transportation and sustainability forever, and you believe in the power of electric vehicles, this video is for you. James Stevenson, a well-known Tesla analyst and shareholder, is optimistic about the company's future despite recent setbacks and a dip in the stock market. Join us as we explore his insights and why he believes Tesla stock is set to soar. Buckle up and get ready to be inspired by the potential for growth and profitability in the world of EVs. Before we go there, smash that like button and subscribe. Why do you think Tesla stock is going to skyrocket? Even though Tesla's stock has fluctuated a lot over the past year, there are still a lot of bulls out there who are optimistic about the future of the leading electric vehicle maker in the market. They shouldn't pass up this opportunity. On January 16, James Stevenson, a Tesla stockholder, analyst, and well-known member of the Tesla Twitter community, posted a lengthy thread expressing his optimistic assessment for Tesla in 2023. According to Stevenson, Nazaris might believe that Tesla's recent significant price cuts will obliterate the company's prospects for profit growth in 2023. Even though I hate to say it, 2023 earnings and recorded deliveries are still being received. He then responded to the Twitter thread with a series of tweets that included charts and explanations of his viewpoint. He said that even though Tesla's deliveries in Q3 and Q4 fell short of analyst expectations because the company was slowing down, the current price reductions ensure that Tesla will continue to set quarterly records for deliveries. The Tesla Model 3 and Model Y, according to Stevenson, are the best-selling luxury cars in the world. He also claims that sales of the former are increasing, though not as quickly as those of the latter, which will enable the company's two recently opened factories to produce more than 3,000 vehicles each week by the end of 2022. Stevenson then sent a tweet with a graphic that showed production and delivery information linked. The chart above demonstrates that, while shipping and inventory levels continue to climb, and the average cost per car delivered rises, Austin and Berlin plants have significantly boosted production since they started operating at capacity in the middle of 2022 through 2023. Stevenson stated in a conference that Tesla's analysts predict production will exceed deliveries. Profit growth is the most crucial aspect for investors to take into account when considering profitability. By the end of 2023, Elon Musk, CEO of Tesla, projected that all of the test's self-driving capabilities would be available to eligible vehicles. According to Martin Vika, head of investor relations at Tesla, the firm is on schedule to release supervised FSD in the timeframe Musk had anticipated. According to Vika, my prediction is that Tesla will increase profits over the next few years by making fully autonomous driving so appealing that more customers would eventually be willing to pay a higher price for it. Supervised autonomy, also known as supervised FSD, refers to the situation in which the driver remains a crucial component of the vehicle's operation, but does so in a largely passive manner. Regardless of when Tesla fully automated driving technology is made available to the public, drivers must be alert and follow safe driving practices. This includes refraining from abusing their advanced driver assistance systems, as demonstrated by FSD beta program participants. We have a strong belief that anyone who uses FSD while operating a vehicle will be completely barred from utilizing the service. According to Vita, that Tesla will keep advancing its autonomous technology as it collects more information through interventions, allowing the company to learn more from drivers who actively correct fully autonomous maneuvers. We are pursuing this course because we think that artificial intelligence, AI, and massive data collection are the only ways to address the issue of universal autonomy. According to Tesla's Q3 earnings call in October, each unit can store over 3 megawatt-hours of energy, which is enough to power an average of 3,600 homes for an hour. Stevenson anticipates significant revenue growth from the Tesla Megapack, which stores energy for the grid reliably and safely, removing the need for gas peaker plants and helping to prevent outages. As Vika stated in yet another chart in the aforementioned Twitter thread by Stevenson, the Tesla energy business has notably seen significant progress in 2022 despite economic uncertainties. In the Q3 earnings call, Elon Musk, the CEO of Tesla, recently said that the business anticipates a 150 to 200% annual growth in stationary energy storage, which is far faster than the auto industry. Installing solar panels, solar roofs, and stationary energy storage devices like Powerwalls and Megapacks are among Tesla Energy's specialties. The business stated in its letter to shareholders last quarter that energy at 2.1 gigawatts storage deployment reached a new quarterly high. DESA reported that in Q3, they deployed 2.1 gigawatt-hours of energy storage, the biggest amount they have ever accomplished, up 62% year-over-year. This gain was achieved in spite of the fact that their energy sector continues to be more affected by semiconductor problems than their automotive business, and in spite of the fact that demand for their storage goods continues to exceed their supply. According to Stevenson, Tesla's strategic pricing in 2023 cuts will impede the growth of earnings per delivery. However, earnings dollars will increase as a result of the increased deliveries. He also disclosed the reasons behind the lack of decline in earnings per delivery, citing the ramping up of plants in Austin and Berlin, as well as the highest cost per vehicle in Fremont, which is contributing less and less to the global mix. The more weekly vehicles produced, the more difficult it is to deliver them all by the end of each quarter, as shown in another figure. Stevenson provided an illustration of how the waves affect Tesla's quarterly finished goods inventories despite a decline in revenue per vehicle in 2021 and 2022. According to Stevenson, Tesla's automotive gross margin rose, excluding regulatory credits. Revenue is expected to increase into 2023, even if Q4 will see a decline. The Tesla analyst provided a more thorough graphic that demonstrated how revenue has increased over time for the company, with Q4 revenue reaching an all-time high of almost $25 billion more in the entire 2019 calendar year. He tweeted that some Tesla believers argue that the company's operating expense figures are overstated because they haven't increased sufficiently, but that the CEO stock pay is primarily to blame for this. In another tweet, he stated that Elon Musk's 2012 stock compensation exercise resulted in a special payroll tax of $340 million for the fourth quarter of 2021. Further graphics in Stevenson's Twitter thread support his prediction in a more thorough set of depictions of Tesla's deliveries, revenues, and earnings following its worst year ever. Several analysts are confident that Tesla stock is the best investment for 2023. Benjamin Callaway, an equity expert, lowered his projected price of Tesla shares from $316 to $252. Following that, Kilo positioned Tesla as the leading concept stock for 2023 before 6 analysts lowered their price predictions. Despite this, analysts' buy and outperform ratings for Tesla stock have not changed, is harming Tesla investors. Tesla Bull has recently expressed displeased with Musk's Twitter excavated hat, claiming that the situation is a soap opera that is harming Musk's and Tesla's brands. It would be easy for us and other bulls to give up on this and view the near-term headwinds as too fierce to be overcome for the stock to function in 2023, but Ives remains optimistic. Additionally, the analyst applied this stock has bottomed in our judgment and works from here provided Musk returns. Ives lowered his price target for Tesla stock last week from $250 to $175 while maintaining his outperform rating. Ives has turned his focus to Tesla and stopped selling the company's stock. He hasn't said explicitly that the response to Musk and Twitter is responsible for more than 70% of the recent sell-off in Tesla stock, but the streak will closely examine any additional strategic blunders made by Musk that could have an impact on shares. He went on to say that it is still too early in the year to make any significant predictions, so Tesla stock is still one to watch. If you would like to receive updates on the price of Tesla stock, we strongly advise that you subscribe to our channel. If you enjoy this video, please hit the like button. I'll see you in the next one.